We're talking airlines today. AirAsia's history goes back to 1993 when the airline was formally established. It was originally founded by DRB Hicom, a government-linked corporation in Malaysia, started operations in 96, but the airline posted years of red ink. In 01, the airline was bought by a former music exec, Tony Fernandes, who paid 1 ringgit. 1 ringgit, what a bargain, to buy an airline with just 2 jets. Can you call 2 jets an airline? 1 going, 1 coming back? The timing not ideal. It was 3 days before 9/11, but he adapted and adopted the low-cost model, and since then has transformed the company into a profitable brand. In fact, something like 21% up in the first quarter, the envy of many airlines. And Tony the Tiger from AirAsia is our guest on the show today. Hello, dude.
Hey,
good
Bernie.
to see you. How you doing?
Good to see you. Good to see you in the flesh.
Airline industry picking up a little bit?
Well, I mean, I think there are 2 types of airlines right now. For us, we're experiencing great demand. First quarter was great, 21%, 23% actually. Second quarter's up 21%. We're in a nice spot. I think people are looking for value. Our investment in our route network is paying off. Our cost structure is very low, hence we can offer very low fares. We just got rid of admin charges after fuel surcharges. So people are seeing value in us, and our loads are very good.
And you know, I came across this in the local paper today. I'm not trying to do free marketing, but this kind of caught my eye. 238 Hong Kong, which is give or take $30, something like that.
Yeah, about
one way, all in, no more admin charge to Penang. That beach looks very, very inviting. It looks like you're going to have more cash to work with very soon. You've told us in the last 24 hours that you're planning to issue 20% more shares, and that's not going to be a general offer to all the shareholders. It's going to be to one institution, maybe one partner?
Well, no, we have, what Bloomberg asked me yesterday, we have been approached by some strategic investors and funds who want to buy the whole lot of 20%. So it's one option that we and our financial advisors are looking at. We're aiming to get approval from our shareholders on our AGM on August the 3rd, and then pretty soon after that we'll do the placement.
Who are you talking to, Tony, just between you and me?
If it was just between you and you, maybe I could tell you. But a lot of people watch you. What
about the dilutive effect on the minority shareholders?
Well, no, I think the whole impact will be very minimal. Our earnings are very strong going forward, and investors have been concerned about our gearing. We're actually very cash positive, but this makes us even more cash positive. And our aim is to get gearing down to the 2.5 level over the next 3-4 years. So it's looking good.
I'm kind of wondering if you're kind of going wacko in your middle age now. You're buying planes, you're putting down orders, cutting deposit checks for A350s. I think you just renewed some leases on A340s recently in advance of getting those A350s. Everybody else is parking aircraft in the middle of the Arizona desert, if I'm not wrong.
Okay,
most of them.
2 things. Firstly, the 350s and the 340s is AirAsia X, which is a separate company of which we own 16%. Second thing, as I keep telling everyone, we're contrarian, but we're also in a different space. We're not Cathay, we're not SIA, we're not Malaysian Airlines. I like to see us more as a consumer stock. We're more like Walmart. And in our end, demand is good. We're increasing capacity, and we're filling that capacity. People still want to fly. It's at what price they want to fly. And we're in that sweet spot that Walmart, Costco, McDonald's are all in, that if there's value, people will fly.
Yeah, no, I've learned to not compare you or put AirAsia and Cathay or NSIA next to each other. Very, very different models. I mean, if you can make money at $30 one way from Hong Kong to Penang and back, you're obviously doing something very, very different than the other carriers. By selling this stake, you'll raise 500 million ringgit, or give or take $140 million. That'll bring your debt level down. You're on record recently as calling bankers swine. There's no swine flu. There's just bankers that are the swine. Endearing yourself, of course, to the iBanking community, Tony.
Well, no, I mean, it's said in jest, and of course you guys didn't put my jest side in it. I mean, at Bloomberg, people asked me, what about swine flu? And swine flu is not a big deal. People are now realizing, it's just a strain of flu. And obviously, in Asia, we got a little bit more stressed out because of SARS. But things are going back to normal. People realizing that it can be treated, and they're taking their normal precautions.
Okay.
And I said, yeah, the only swines right now are bankers. With a laugh, which of course you did put out.
The problem is
the number of positive emails I got from that comment.
Now you're doing it on TV, but when you say it in print, it doesn't have the same effect. A lot can be lost in translation. Still to come, more with Tony Fernandes. Remember when oil looked sure to punch through 150 a barrel? Very different environment today. Away from it. Here's some little factoids for you. Did you know that AirAsia was the first airline in the world to get rid of fuel surcharges? It introduced its no fuel surcharge initiative last, when was it, around Thanksgiving, U.S. Thanksgiving, November, to offer the lowest fares despite the fuel price hike at the time. And more recently, they abolished their administration fee. In fact, that's what they're doing in their ad today, direct to Penang from Hong Kong, no admin fee. This is and fuel surcharge. Should say or fuel surcharge, Tony. You've got to work on your syntax. Now leaving passengers paying just the seat charge and the airport tax. In some cases, the airport tax is more than the seat charge itself. It makes for a very unpleasant wake-up call when the final bill comes. Tony is back with us on the show here. Got a question here. They're flying in because you're very popular. People love airlines. They can identify with everyone. Everybody's got a horror story and a thank you story. Here's a question from Andy in Houston. It says, when you charge $30 from Hong Kong to Penang, what is the break even? I mean, I couldn't drive a car if you could drive it. Well, you could actually, but I can't drive for $30.
Well, our break even, obviously not every seat is at $30. But a lot.
Well, how many seats? I want to know.
At least 30%.
One row out of 40?
About 30%. Our break even on that route would be about 61%, which is a very respectable load. It's all about what people keep failing to see is all about the cost structure. We're running at 2.38 cents per ASK. Our next Asian competitor would be, almost double that. That enables us to have very, very low fares and make money. On top of that,
wait a minute. So you're operating 50% below your closest competitor on a cost per
on the same
kilometer.
Stage length, correct.
Okay, that means you are skimping on something.
No, we're not. We have high productivity. We utilize our planes very well. We are flying them 13 hours block time. We have high-density seats. One thing also people are missing is that we have a very high ancillary income. People are buying exchange offers. People are buying food, merchandise. We charge for better seats if you want them. And that all adds up to about 13% of our income. That's another way of reducing fares because the more ancillary income, the more food we sell, etc., we can put that saving back into the airfare.
So you're kind of like you're turning more and more into a Richard Branson, actually. Cola, food, and you come from the record industry. Actually.
Well, I worked for him, but we're different. We're very different. I have no preconception of going to the moon or flying a balloon at 36,000 feet.
You'd rather be in your plane.
I'm quite happy sitting talking to you here.
Question from Gabriel here. On the fuel question. You went from 150 down to, what are we at, 60? Something like that?
64.
Yeah. How are you
smiling.
doing? Did you bet the wrong way? Did you bank on fuel hitting 250?
No, we had some hedges in. We got out of them in the fourth quarter. Cost us a bit of money. We're completely unhedged.
You're on spot.
We're on spot.
A spot basis now.
So obviously we're happy with 64, and we've always predicted that it was a bit toppish at 70. We believe the range is 55 to 60. We would love to hedge, but there's so much volatility in the market right now, we don't think it's too expensive. So when the volatility comes down, then we will go back and hedge again.
What is your gut feeling about what the sort of optimal, or what the long-range sort of baseline is for fuel?
If you take simple economics, what's the cost of getting the oil out of the ground? It varies from $20 to maybe as high as $40.
Yeah, I mean, some of oil shale makes sense at 75, but straight down delivery.
Then you put a margin, then you look at demand. The trouble is we've got a lot of financial demand and real demand, and so you're not getting a true price. I believe anything above $50 is a fair price, up to about 60, somewhere around there. But it's anyone's guess, because there's so many other external factors that come into it, and fuel's used as a hedge against inflation. Sometimes you see fuel going down because of currencies. So who knows? But we think 50 to 60 is a fair number.
Let me ask you a quick question here. An anonymous writer writes in. He says, what are the chances you could suffer the same fate as Virgin? 1 minute doing just swell, and the next minute laying off hundreds. Or have you been there, done that?
You're talking Virgin Blue, I presume. I think the key thing to us is focus. I mean, we've been very focused on being a low-cost airline. We're exactly the same we were 7 years ago. We are very focused on low cost. Virgin started doing lots of other things, Virgin Blue. And to me, the most important thing in a low-cost carrier is focus and discipline. We've done that for 7 years. We've continued to reduce our costs, and that enables us to build market share.
Okay.